Isn't that fascinating? When we look at all of cryptocurrencies, all of the different categories, mobile mining was the best performer in the last week. The question is why? Let's have a look at what's driving this. Let's see whether or not this can continue. So the category grew by 15.8%, and that's of course due to the Pi network appreciating. Now, this is not the first video on Pi on this channel. I've published several videos in the past, and most of those videos tend to outperform the average video. So the average video is this gray area, and those particular videos on Pi, that's the blue line. So there's a lot of attention on Pi network. And still to today, people search for the cryptocurrency more than they do for the average crypto. Interestingly enough though, all of that attention was not able to convert into price performance because there's bad news over bad news. This was the news 1 month ago on Binance Square. Pi network cannot hold the $1. And of course, we are very far away from this. We're now at 61 cents. Even after the recent rally. One of the main reasons is the migration. So it's very hard when you've mined your Pi tokens on your phone to actually move this to the main net to potentially sell that off. There's a very opaque KYC process. Some people get approved, others don't. There is thousands and thousands of dollars that can't go through. And the team is not properly addressing that issue. Instead, the team tries to direct attention towards the Pi domains auction. Now, those domains cannot be accessed via the Chrome browser or via the Edge browser or Safari. You need a specific browser just to reach those domains. So really, they aren't worth that much. Still, the Pi network project was able to attract a lot of adoption initially through the mobile mining. It sounds very great on the surface, right? We don't have those big server farms. Instead, it's all decentralized. It's all just on mobile phones, and we can mine Pi for free. With that strategy, the Pi network was able to get 1.87 million subscribers on YouTube alone with just 100 videos. But again, people can't withdraw their mined Pi. At least the majority cannot. Now this is Pi relative to Tether on a linear scale. It seems like there were two pump and dumps and the price can stabilize around the current region. But this is only showing half the picture. When we look at Pi relative to Bitcoin on a logarithmic scale, still we see our pump and dumps, but the decline is a bit more constant. Relative to Ethereum, it's even more constant. So over the course of the last 3 to 4 months, Pi underperformed Ethereum by 45 to 50% roughly. And sometimes we get our fake outs. So a massive sell-off that rebounded and a massive pump and dump in between. But the overall trend is pretty clear. It's a decline of Pi. Now, where does the price decline come from? Probably from market makers that got a lot of Pi tokens to list the token on their centralized exchanges. Those centralized exchanges that get parts of the project for free, they tend to sell off their holding over time. And that's then what creates these kinds of price developments. Yes, when Bitcoin and Ethereum is going up, then Pi is going up as well. But it's always about relative performance, right? Do we get outperformance by taking on more risk? Because crypto is highly correlated, everything goes up and down at the same time. And if we don't get more performance when we take on more risk, why take that worse risk to return trade-off? Really, what I think is going on here is short-term manipulation through the perpetual futures market. All the trading of Pi happens on centralized exchanges, and it's led by OKX, Gate.io, and BitGet. And on the spot market, we had more than 100 million worth of trading volume in the last 24 hours. But on the perpetual futures market, we had even more. We had 208 million. So this is really where the price discovery happens. The problem again is that there's so many eyeballs on Pi network. And in general, I do like to bet on falling prices in this market. There aren't too many new people entering, and many tokens are inflationary, and the market makers tend to sell off their holdings. So it does make sense to bet on falling prices. But we want to do this with assets that have little volatility, not high volatility. Because that's the problem with a chart like this, right? Pi relative to Ethereum. When we've got these fake outs, and let's say we bet on falling prices, we don't really know what we do when a rally like this occurs, right? Are we doubling down? Do we suddenly see a continued short squeeze? What's happening here? Directionally, of course, it makes sense to rather bet on falling than on rising prices. In the last month, most altcoins went down, right? It's all red. Yes, there are a few outliers, but that's while Bitcoin itself barely moved. Bitcoin itself moved by 0.9%. It went slightly down, yet there are only a few altcoins that did better, and the vast majority is doing worse. And this is a pattern we see continuously. We see this over the last month, but we also see this when we zoom out a little bit, right? This is the last year. So now we're looking at the smaller altcoins from place 900 to 1000. And how many altcoins did better than Bitcoin? Bitcoin during the time did 60%. It's only 1, 2, 3, 4. 4 altcoins did better and 94 altcoins did worse than Bitcoin over the last year. So in general, the idea of betting on altcoins doing worse than Bitcoin and Ethereum does make sense. It is a game where the odds are in our favor. The only issue is we don't want to lose everything when a short squeeze like this happens, right? When somebody is manipulating the price. And so there are two ways to approach this. Either we short altcoins that have very little volatility. So in the past, that was true for Balancer. This is Balancer relative to Ethereum. It just goes down all the time. But now Balancer's market cap is so small, it's only around 50 or 60 million, that short term, we still see those short squeezes, right? This is what some people call a scam candle. This is a price increase of 50% on a single day just to then crash down. Because again, too many people bet on falling prices, and so temporary short squeezes happen, especially for the very small tokens. But then if we use tokens that are still larger in market cap and we flip this around, we get very nice performance. So let's go again with Balancer. Let's flip this. This is Ethereum relative to Balancer. So over the course of the last 1.5 years, this is an appreciation of 388%. Over the last 2.5 years, it's up more than 1,000%. So instead of trying to find the needle in the haystack, instead of trying to find the few small outperformers, why don't we just bet on something like this, right? A long-term outperformer, because the tokens inflate in supply, because the market makers sell off their holdings, and because there is no second best. Right? There are a few altcoins, a few cryptocurrencies that do very well long-term, that can hold up their value to a degree. Bitcoin, Ethereum, Solana. But the vast majority of altcoins perform very poorly long-term. And we can make money just with that differential. Here's my personal performance in the last 4 years. A bit less than that. So this is monthly data. So we are now in month 44. And what we see in light gray, that's what I would have gotten had I just dollar cost averaged into Bitcoin. But instead, I did a lot of relative valuation trades, and that's why I get this black return over here. More than 2x compared to what I would have gotten if I just used Bitcoin. And so that's why I think a lot of people make a mistake. They see this bad performance and they conclude from this, let's just stick with Bitcoin. And while this is an improvement to buying and holding many altcoins, it's still a missed opportunity. Because again, we can make money by betting on falling prices responsibly. Again, we do not want to get squeezed out during times like this. Now, I've made a lot of tutorials on the topic as well, right? Using perpetual futures to bet on relative valuations, or risk management with relative valuation bets, or over here, gaining from relative valuations. In the early days, I did this mainly with decentralized finance, so with borrowing and lending platforms like Aave. But recently, I'm changing that. Recently, I mainly use perpetual futures because we've got more options, what to potentially trade, but also it tends to be more efficient in terms of financing. But that goes a bit too much into detail. Again, you can simply just watch 2 videos, right? Risk management with perps and how to use Hyperliquid. Here is my personal return starting with 40K 2 months ago. So that's already an increase of 30%. I forgot to set a proper stop loss over here and I got short squeezed over here. That's why there is this decline. And that was actually the reason why I made this dedicated tutorial video just on that. Simply to remind myself and of course also the community to not fall for that potential problem. This was, by the way, a short on Launchcoin. So the Launchcoin token got squeezed during that time. Had I set proper stop losses for that position, this chart would look much better. But yeah, most people lose with altcoins because the common approach is to just buy a few altcoins and hope for them to outperform Bitcoin. But again, most altcoins tend to underperform Bitcoin most of the time. Thus, if we just flip this around, we we tend to be on the winning side most of the time. And so there are two solutions to the problem. The first solution is simply watch all the tutorial videos, copy trade me, right? You can just do the exact same trades, or you can also find other assets to potentially short. The second solution, and that's for the people that have less time, is to do automatic copy trading. So I'm planning to set this up in the next few weeks. You can simply just deposit your capital and then you will get the exact same return that I get, which in the last 2 months again was this, and which in the last 4 years was this. I'm sometimes getting this nice feedback of people that have recently subscribed. This was a message I got just recently. The annual membership has already paid for itself after the first trade. And so that's how I'm planning to set this up. For the people that have time, but not that much capital yet, they can simply sign up for the monthly membership, learn everything, and copy trade me. For the people that don't have time, but have more capital instead, they can just sign up for annual, and that will then give access to the beta launch of the automated copy trading, which will probably launch in 2 to 3 weeks or so. There's also a 2-month savings in this, so $250. It's a yearly payment, and once copy trading launches, I'll make a dedicated video on how to set this all up, how to deposit the capital. Again, this will be on Hyperliquid, of course. If you want to use Hyperliquid by yourself, by the way, without joining Premium, there's also a link down below that will give you 4% off the trading fees. So a link to Premium should appear over here. It brings you directly to the sign up page. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.